Before we get to this week's episode, I want to take a second and highlight what we've been working on over at Schaffer's. You've no doubt heard of the popular sell in May and go away trend. Well, as contrarians, we recently identified 5 stocks that are poised to buck that trend and enjoy strong growth this summer. It's only available for a limited time, so head over to the link in this episode's bio to get the free report. Can confirm, folks, I did say free. It's free. Check it out. Without further ado, Adam Warner. Ladies and gentlemen, welcome back to the Schaffer's Market Mashup. But also, please welcome back Johns Hopkins' most renowned options trader and scribe, Adam Warner, who was kind enough to fill in this week in the last minute to talk some VIX. Adam, welcome back. It's good to have you back on.
Hey, thanks for having me back, Patrick. Bets were off today, but I was free.
Let's talk elephant in the room. First, I have to congratulate you. Your New York Knickerbockers have secured their first playoff berth in what feels like eons, but really only, 2011, 2014?
I think it's 2013.
Okay.
Yeah. It seems like a lifetime. They've only won, one playoff series in 20 years, something like that.
I'm pretty
I think it was
sure.
2013.
Pretty sure it was against the Celtics.
I don't remember. It was so long, yeah.
It was it's 7+ years. Time is flying. But yeah, it was like the J.R. Smith, Carmelo Anthony team. God, I hated you all. But
yeah, it was definitely Carmelo Anthony.
Yeah, I like this Knicks team, and unlike most Boston fans, I think when the Knicks are good and Boston teams are good, it's just better for basketball and it's better for sports in general. And on that note, you got the Mets in first place. So, you couldn't be happier, right?
Yeah, they're on fire. They're playing bad teams, but you still got to beat them. So they've won it up to 7 in a row. So hopefully they can keep it up.
Red hot, yeah. Like my dad said, you can only beat who's in front of you.
Yeah, exactly.
But no, let's get to the point here. It's great timing, honestly, having you on. For someone who has in his Twitter profile, "In VIX We Trust," between the broad market sell-off, the inflation fears, then kind of like the slivers of good news coming with the CDC and the reopening of everything. The VIX has been all over the place the past 3 days, starting at under 17 or dipping under 17, getting over to 27, and then even it recovered a little bit today, dropped below its 200-day moving average, and then reclaimed it. It's all over the place. So I want to at least start simple. If someone who doesn't have an experience with the VIX or what the Cboe Volatility Index is, they come across an article and they say, the fear gauge hit its highest levels since March as the rest of the market is selling off. What does that tell a retail investor?
Generally speaking, the VIX, they nickname it the fear gauge. It's an index of the volatility of index options, basically. And it moves inverse to the market. So the S&P goes up, VIX tends to drift down, S&P goes down, VIX tends to inch up. But, S&P is moving down a bit faster this week. So the VIX is going to go up. It's just really a question of magnitude. And sometimes it's useful when it kind of overreacts to a market move, and that's a bit what we've had this week. It's and from bottom to top, let's say it's up about 10 points, and so that's like 60% or so. It's a little dangerous using percentages because it's often a low number. But that's a pretty big move. I like to look at it as versus its moving average and 10-day moving average. And it used to be that when it got about 20% over the 10-day moving average, that was somewhat of a bullish signal because it kind of meant that options were getting a little too fearful.
Mm-hmm.
But this week, it closed yesterday. It closed a little over 40% above which is a little, it's not unheard of, but it's been unusual, and that's just a bit on the high side. So it's far from foolproof. That happens in crashes also, like last year. But
Right.
generally speaking, that's an indicator that it's gone a little too far, too fast. And again, this is pretty quick. It was this only happened over a couple of days, really. Last Friday, VIX closed. I think it closed at 1669, and yesterday it closed at 2779. So actually, I understand that's 11 points.
Yeah.
So that's that's a big move in a few days.
Yeah, well, I saw an article from Bespoke that was talking about, this 3-day spike, or these 3-day spikes have been happening more and more since the financial crisis. It seems like markets have become more sensitive to this volatility. Can you point to any reason why?
I don't know. Yeah, I noticed that I ran and tweeted out a chart today that I was looking at times incidents where the VIX has gone 40% past its 10-day moving average, and I have 23 incidents of it, but all but 5 of them are since 2010. So
Yeah.
it really is a post financial crisis phenomenon to see moves like this. That often. I don't know. I guess it's everything in the world reacts faster now. News reacts faster. Mm-hmm. People react faster to news. Algorithms and whatnot. So that's probably the best explanation. Is just the volume's bigger, the triggers are faster, and it just moves more and it moves quicker. And in a sense, it stops the moves a little sooner than they would. Maybe I'm just speculating here, but maybe market moves that might have taken a few weeks happen in a week nowadays. I don't know. I don't know the answer, but I think that's the reason. I think it's just faster markets now.
Mm-hmm. Feels like you look at all the pace of play statistics in something like basketball when you compare it to the 80s to now, where there's analytics involved. Everything's quicker. The pace is quicker. I think it's just a product of the technology, the internet, and I don't know. It feels almost cheating to say an answer that simple, but I feel like that's all we got.
Yeah, like I don't think the Robinhood traders move this, but
yeah, that's true.
But, maybe on the margin. Actually, no. You know what? There's no way that's the cause.
No.
They don't have that. Even all of them combined don't have that kind of pull on like something this big.
So you mentioned the 10-day moving average, and that's a moving average we at Schaffer's track often, even just for broad equities. Why the 10 though? Because you there are other moving averages to use, shorter ones like 20 and 40, and then kind of intermediate 80, 100, and then the longer term 200, 320, and then you can get into the weekly. What makes you hone in on like the 10-day?
Yeah, honestly, I probably first read it from Bernie Schaefer's report 20 years ago. That's probably where I started. That's probably where I started looking at it. But I do think it's. I'm not for stocks because it would look more like 50s and 200s. But I think for something like this, it's a statistic, and you kind of look. I like the idea of just looking at it versus itself, and I think like you tend to it's 2 weeks really, and that's the recent history of it. And I kind of just think it's a better, you're looking for just kind of outlier moves. And I think you really need to go short term to try to pick up that outlier. I think when you go, 50, that's a long time for just a statistic. And it's kind of ancient history. Prefer a shorter term one for something like this. I'm sure there's utility in looking at longer ones, for just a longer term picture of it.
Yeah.
I think for trading in this particular case, the shorter term is better.
For the VIX, I think if you're looking at an individual stock, I think 10-day can be a little hairy sometimes. But when you're talking about like a volatility tool like this, the shorter term, the better.
If a stock, you're going to get a lot of noise, obviously, in a shorter term look, which I suppose is fine if you day trade, momentum trade, whatever. If you're looking longer term, it's not optimal. But if you're looking at the VIX as an indicator, I think you kind of want the noise because I think your goal is to find the noise, and hey, there's too much noise, and maybe that's contrarian. Yes. So maybe that's a feature, not a bug.
Right. So that leads into my question there is, what are some ways a retail trader or a retail investor can take advantage of VIX spikes or even on the other end, like kind of like a muted VIX? Can they profit off it? Can they use it as an indicator? What can they do?
The VIX going up too far too fast, generally speaking, is a good country indicator. Like these, I mentioned these times it's gone 40% above. A week later, it's up about 2/3 of the time, and 3 weeks later, it's about the same thing. There are, however, a couple major accidents. Mostly last year, it was just it was up. The VIX went 40% above on the way to just exploding, and the market last February, March, as I'm sure people remember, got destroyed. Crashes come from oversold markets. They don't come off of like overbought markets. It doesn't crash from the top really. It crashes after it's already started declining. So the same thing with this. It tends to show an overbought VIX tends to show a move is overextended, but there's some real disasters in that. So generally speaking, I think you can fade, or buy the market, not buy the VIX. You could buy the market into an overbought VIX. The reverse is not really true. Like if the VIX is weak, it tends to be weak slowly. Like today it's down a lot. It'll go down a lot off a pop. Mm-hmm. But I think we're talking more about, if it's like drifting, like from a lot of this year being 2021, it's drifted into the teens. That's just, apathy isn't really a great market signal. Mm-hmm. That's just kind of, it's just kind of apathy, and that I would not use any kind of VIX analysis in any major way.
Yeah, well, I pulled our episode from late February, I think it was the 25th, and we talked about the Volatility Crush, and the VIX had just dipped below 20. Since then, it had spent a considerable amount of time below 20. In reality, we didn't really have much to talk about then because it was so muted. Now I think is the time to highlight its utility.
Right, exactly. Yeah, that's more normal. Just the kind of like constant drift. Usually prices a little higher than the actual market volatility. So generally speaking, it anticipates that the market will get a little busier, and most of the time it doesn't, and then you get a week like this where all of a sudden it does. Mm-hmm. So this is really kind of typical, drifts and explodes in a week, and then I'm not gonna make a prediction, maybe the market's topped and we really do start going down now, but these are most likely blips, and we'll in a few weeks or a month we'll be back to drifting every day again. And on top of that, you have summer coming up, which almost always tends to be a slow time. So if I had to make a grand prediction, this is a blip, and maybe in the fall you'll start to see more of a sustained lift in the next who knows.
Right, and
that's my total guess.
Because I think that's important to say, because you're right, you don't want to make any predictions, but you can still say without predicting that we shouldn't overreact. This inflation data has been coming out for a while now. It's nothing new. There's been no new developments really. It just kind of all bubbled over. And what happens when something bubbles over? It goes back down to normal.
Yeah, right. Inflation is a good example. It's like you said, it's been on the radar, and then you had a couple data points this week that if you're of the belief that inflation is going to be a problem, they certainly reinforce that, and markets get spooked. Mm-hmm. But in a few weeks, maybe you have data points that, either it's not as bad as we thought, or people just get used to pricing it in, and then you got, Memorial Day weekend, and you get summer coming up, and that tends to dampen volatility and tends to dampen market moves.
Yeah, and we talked about it in the intro. You have the CDC announcing that anyone with 2 shots and it can basically resume to life as normal. Retail sales are coming out tomorrow. That sentiment can kind of start to pull it back down to the levels it was in this early spring. But I do think it's important for retail investors to kind of have that information in the back of their head for when it spikes, how to kind of react. And so I guess kind of really the last question is, whenever the next spike is, how should an investor react? Like, should they consider hedging? I don't want you to give advice, but just walk me through what their mindset should be.
Yeah, I tend to like to go a little long into VIX spikes, but again, I would emphasize it works more than it doesn't, but the accidents are brutal. So you do have to have an eye for the door that, hey, maybe this is a really bad timing. So I think you should always. My dad actually told me this. Only buy as much that lets you buy more if it goes lower. Like don't shoot your whole buying power in one shot. So buy gingerly or go long gingerly into these spikes, and if you're wrong, start cutting back and take your loss.
Yeah, so basically what you're saying is don't overpay for like a lifetime contract for Bobby Bonilla.
Right, you might find you're still paying $1 million every year until like 2050.
Oh, that still blows my mind. But
I think it's July 4th or something like that, or I think July 1st. I think Bobby Bonilla Day is coming up.
Yeah, is this the final year? No,
I don't think so. I think it still goes.
Wow, that's amazing. Well, I guess I wanted to have you on here for a quick episode. But thanks again for coming on, Adam. Best of luck to the Knicks in the playoffs. The Celtics, I don't know. I might have to kind of temporarily shift my fandom let me clarify that. I'm not shifting my fandom. I will be rooting for the Knicks to cause some problems in the East.
Or you're a Red Sox fan because they're doing pretty well.
Yeah, they're great, but the problem is living in Cincinnati, I only get to see them every now and then on ESPN Plus. You see Disney buying La Liga and the Bundesliga. Why can't they just grab the MLB too? Put it all under Mickey Mouse's umbrella. So Red Sox fans are all over the place, and it's harder to watch. But hey, I'm gonna get off my soapbox now. But thanks again for coming on, Adam. Would love to have you on again, and go Mets and Knicks. Can't believe I just said that.
Thank you. Thanks for having me on, Patrick.
Take care, Adam.